opportunity and you'll watch others get rich while you sit on the sidelines. That's what Winston just said to me there. He's a bit harsh, isn't it? So what are you going to learn today? 3 companies that make the parts everybody needs for AI and smart devices. Why these stocks could double or triple your money. And these are companies with real advantages that competitors can't easily copy. I'll also give you the perfect timing. We're catching this wave early. Now, why the heck should you listen to me? Well, my name is Felix Preen. I used to be one of those investment bankers, you know, one of those frightful chaps. I also founded the GOAT Academy, which is our educational place, and we have taught so far over 20,000 students. I focus on facts and data. I focus on the rules that Wall Street uses, and these 3 stocks just got flagged by the rules. Now, why are semiconductors the thing right now? Is it not a bit late? Shouldn't we just hold on to NVIDIA till death do us part? Well, you can do, but I think you might be disappointed because you miss out on these ones. So think of it like a gold rush. What do you need in a gold rush? Well, yes, gold, but you also need shovels and picks. You get the idea. And that's what semiconductors actually are. So semis, as we're going to call them, are those picks and shovels. AI is creating massive, massive demand for smarter, faster chips. But it isn't just AI, it is also cars that are now becoming computers. And do you remember when your phone just made phone calls? Well, cars used to just drive people around. Now they're becoming computers on wheels. They need way more chips before. And then in addition to that, we've got the US government backing the industry like never before. So all the stars are aligning for explosive growth. So let me walk you through stock numero uno, which is called Amkor. Ticker symbol is AMKR. And if you're a little familiar with the Wall Street rules on entry points and exit points and all that good stuff, then you look at this chart and you go, okay, I know Felix is looking at this. But most people don't. Like I used to look at these charts and I used to go, squiggly lines, the price is going up a little bit after it's gone down a little bit. That was all I could see. So let me do one better for you than this video. Yes, I'm going to walk you through the 3 stocks here and why I like them right now. But I'm going to run a live educational session. I'll teach you all the rules. And those rules are what changed my life. And I learned those rules from my Wall Street mentors. And they basically tell you the when to buy, the what to buy, and then most importantly, the second when. What's the second when? It's when to sell. Because when you sell, you make money. Well, if you sell at the right point, right? If you don't, you just go through these up and down cycles, right? And you just feel miserable because you don't know which way it's going. And you're up a lot and you're just asking some guy on YouTube going, should I hold on to this? Should I sell this, right? And that's most of us. So I'll fix that for you. But if you look at the stock chart, according to Wall Street's own rules, what do you see? Well, we've got this lovely little sideways consolidation thing here. Now it's broken out below its lows. Its lows were down here, so it's recovered quite nicely. It's taken out the yellow line, 50-day moving average. It's taken out the purple line, 150-day moving average, and that might all go like over your head, and that's completely fine, right? Rotation will help you, but showing up to the live training will help you like 10 times more. And so at that point where we are right now, we're just screaming breakout, 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 right? And that's exactly the kind of point we want to get into. Now, no stock will ever make you money unless you've got good risk management. So that's the caveat for everything here. So don't just run out and blindly buy something unless you know where you're going to sell it. Because, as I say, you're not going to make any money. But let me run you through a little bit about the stock. What are these guys? Well, what do they actually do? Okay, imagine a chip is like a brain. I really can't draw a brain. Imagine this was a brain, okay? I'm going to write brain above it so that it is more clear. That's what a chip is. Now, every brain needs some protective packaging so that it can actually be used. It is a gift wrapper. Think of it that way, right? Do you remember going into department stores and they used to wrap things beautifully? Do they still do that? So these guys take a raw chip and then they package them so that they can actually work in places where they get bounced around a lot, so to speak. So we're thinking phones, we're thinking cars, we're thinking, why is this large cat on my mouse pad? Any kind of AI system, chips need to be wrapped. So every AI chip needs a special kind of a packaging. There's just no way around it. Now, sounds weird, right? I know a little bit about the industry because I actually have a company, we supply chemicals to the semiconductor industry. And you wouldn't know that they need all those chemicals, but apparently they do. Otherwise, they can't make a thing. So it's an interesting business. Now, these guys, in addition to that, make 6 billion a year, which is not bad. This isn't some teeny tiny startup that no one's ever heard of. They also have, and you might want to write these down, 1.5 billion in cash. And that's very important because it means, well, they also have very little debt, so it's a very solid business. They grew at 14% last quarter, which is pretty decent. So they're making money. They're not just hoping for it. This isn't some company that's put AI in the title and is hoping for something. And what's the secret weapon here? There's a secret that makes these guys extraordinary. And the secret is not what you would expect. It is 300 engineers. Because actually smart engineers that are specialized in chip packaging are rare. So these guys are the biggest player in car chips. And cars need way more chips now. Think of all those cameras and all the LiDAR and all that madness, right? They're building a new factory in Arizona. And guess who's helping? Uncle Sam. He's paying for some of that. And they've got long-term partnerships with the biggest chip companies in the world. So why is the stock on our list? Well, let's summarize. The AI boom means we need more chips. It's as simple as that in everything. The car industry is going to recover. Why? Because interest rates are coming down. What's the number one thing that slows car sales down? It's interest rates. Why? Because if you're American, you generally don't buy the car, you lease it. So the cost of your car is directly connected to interest rates. And we have, this is item number one, this is two. We have three, government help. The US government really wants the whole semiconductor industry back in America. And these guys do something that's very, very unique, advanced packaging, so they can charge more for it. So in my view, the stock is actually cheap compared to how fast they're growing. And if you zoom out a little bit, well, you see the stock hasn't really done anything since 2021, right? Well, chip demand has gone through the roof since 2021, so this doesn't make a lot of sense. But what we really, really like is this. Let me just run you through the chart here. Maybe I'll do this for this one in more detail, a little bit less detail for the other one. So this was your bottom, right? Now, nobody can ever guess the bottom of a market. So forget about that. Just forget about it. Where's that line from? Bicky Blue Eyes, right? Anybody get that reference? Put it in the chat down below. And then you see this yellow line here. Let me just delete the yellow lines. That one there. That is the 50-day moving average line. That is the line of all lines. That is the line that all other lines are jealous of. And that's the one you want to be watching out for because that's the one line that Wall Street looks at. And that's generally your sort of trader's entry. So if you're really an aggressive trader, you could have bought somewhere down here. But most people, and let me know in the comments which one, how you identify. Do you identify as a trader or as an investor? If you're an investor, you generally want to be looking at this line here. And that is your 150-day moving average line. That's your trader's line. Okay, you might want to write this down. And we're now above that too, right? And then as we're above it, you might be like, oh my God, it's too late, it's too late. No. Stocks, when they break through these lines, they tend to consolidate. They tend to do this sort of heartbeat pattern, you know. And now what we're seeing is that we're actually breaking out of that pattern. So we're above that now, and that's a very, very beautiful thing. And that is actually, in my book, the perfect entry point. Might seem a little complex. Well, come to the training, and I'll really walk you through the rules there. But yeah, that's why we like AMKR, a stock that most people probably haven't heard of. Was that valuable? That was valuable. Put a V or a valuable in the chat down below. Now, stock numero deux is KLIC, another one that probably nobody's heard of. And again, that's a beautiful chart. Doesn't look like a beautiful chart to most people, but it's a beautiful.
All right, everyone, let's jump into a little breakdown here. I think there's a stock that's going to be pretty interesting to you. You may have heard of it. It is connected to NVIDIA. And it did just have a massive move that up until just last night into this morning, I wasn't sure if this was going to be a move that holds or not. So let's jump into that. I can see your comments on YouTube and on X. So if you get those in, I can communicate and we can work that into this as it fits, as it suits. But in the meantime, let's jump into the breakdown. And good morning. Okay? How's that sound? Should sound all right, right? Getting going here, guys. Good morning, good afternoon. We have some audio issues, but we are getting there. All right. I think we're good to go. Get those comments in, can adjust those within the next 5 to 10 minutes, depending on when I see them. I'm going to be looking at the chart, talking about AI. So there should be something for you to take away. There's one stock that is backed by NVIDIA that could explode in the next 7 days. I know that this stock is up a lot, but sometimes you have to buy stocks that are up a lot because there was a reason they went up in the first place. And it's leveling off at a place where you can still buy and have a really close, small risk, which is an important caveat to buying stocks that are up a lot. All right, let's talk about this NVIDIA-backed AI stock. This is the chart, okay? NBIS is the ticker, Nebius. And this is the information about what they do, what they plan to do but have not yet, what they're trying to do, and some information about other players, okay? Which you've heard of. You've heard of CoreWeave. So, if that's not exactly what you're here for, you can just look at the chart and say, someone, family office, high net worth, fund, a combination of all of those, plus retail, that's what the market is. Someone likes this stock. Someone likes this chart. I like this chart. Look at this move, okay? Yes, it is insane. It's 50% at this point. It did go higher and then came back. I wasn't sure that it was a great buy. Think about a move like Oracle. When you see a move that's whatever, 60% comes back, we're splitting hairs here, but we know that's a big move, okay? You don't know if it's just going to give a lot of that back, okay? Think about some of the earnings moves. Microsoft's earnings move gave most of it back. Did it go up a fair amount? 10% for Microsoft is a huge amount. In NBIS case, it hasn't given much of it back, if at all, and these levels look so compressed. And if we want to get detailed, we can look at the intradaily, but this daily chart, which is 24 hours in order to include wicks from after hours, tells us everything we need to know. Why do we like compressed charts? We can get in, risk a previous level, and have a reward that's 5 to 10 times that. Just like if you walk into a poker game and put whatever a small amount of money is for you, let's say it's $100 down, and you have 2 aces, you're almost certainly going to win that hand. Is this a 2 aces chart? I'm not a pro poker player, so I don't know what 2 aces is called. It's probably some fancy name for that. I don't know if it's a 2 aces chart, okay? It could be like two jacks chart or something, okay? It's a pretty good hand, okay? There's a good opportunity here in terms of upside, and you can risk a very small amount of money, okay? And on the 5-year, okay, this thing has just gone up. It is NVIDIA backed. There have been eyes on this over and over and over again because NVIDIA made that investment. And now there's another opportunity to get in. And you may say, oh, well, I don't buy things that are up a lot. Oh, it's like, well, did you say that when NVIDIA was at $40? I don't buy things that are up to $40 from $9, a 4x. It's like, well, NVIDIA went from 40 to, what's 40 times 4? I think that's 160, right? It actually is above that at this point. So, you know what? Stocks that go up, go up. So, that is the reason that we're interested in NBIS right now. And let's talk about some of the specifics as to what this company does. They do AI infrastructure. That's an important distinction from a unicorn AI competitor to ChatGPT, to Claude. This is a spin-off from Yandex. Yandex is Russia's Facebook. You can't use Facebook in Russia, so you use Yandex. It divested the Russian operations due to sanctions. This is from Wikipedia. And now it's called Nebius, okay? It's not a social network. It does this. Because you do need this type of technology to power social networks for the algorithmic ranking of feeds. They build large-scale GPU clusters. They use high-end NVIDIA GPUs. So they not only have the NVIDIA investment, they also have the NVIDIA partnership and the access. And they can scale. And the scaling is the reason ChatGPT is able to do what it's able to do, okay? Because it can ask thousands, hundreds of thousands, millions of nodes your question and come up with an answer like that, spreading out that compute across thousands of GPUs, if not millions. The numbers are astronomical, insane, and infrastructure is useful because deploying AI is difficult, and they help with that. And these consulting companies, some of them are publicly traded tickers. Accenture, if they don't use AI, they're not going to get hired. So this is a well-positioned company with that NVIDIA partnership, that NVIDIA investment. They are competing with FANG. And this is a risk, okay? Will certain companies not use them? Will the sanction from Russia impact them? It already appears they're not getting contracts from Russia, will they get cut off from the US? Okay, so that's NBIS. This is the $17 billion Microsoft agreement. It's absolutely insane. This is the chart, and this is the risk level. Risk $1 to 90 to make 10, 20, 30. It's an excellent opportunity. If you like opportunities like this, if you want to chat about how I'm able to synthesize all this information in a stock landscape that you would think is dominated by funds, by specialists, go over to stockscommunity.com. You can try it out for $25. I think there's worse ways to spend $25. Hit that subscribe button if you haven't hit it yet, and I will see you in the next one. See what Felix is up to.
Beautiful piece of chart. So what are these guys? And who are they? What do they do? Why should we care? Well, let me walk you through this. So the ticker symbol here is KLIC. They are basically the tool maker. Okay. Remember the California gold rush? The people who got rich, they sold, what did they sold? Let's go back to that. They sold picks and shovels. Artiste at work here, right? And what do? They make machines that package chips, other people's chips. So when chip companies want to sell more chips, well, they need to buy KLIC machines. So it's basically like being the only company that makes the machines everybody needs. They just beat earnings expectations. You can see that here on the Trade Vision chart as well. That'll always tell you down there, right? 40% better than expected, which is a pretty decent beat, which is what really kicked off the recovery here. They have a 44% profit margin. So they sell profit margin. You see, bankers, we struggle with spelling. So what that means is they sell something for, they sell $1,000, they keep $440. That's pretty good. Look at most businesses, they don't do that. They have loads of cash, so just sitting on the stuff. Imagine, Scrooge McDuck jumping into his cash pile. That's basically them. And it means when you have lots of cash and very little debt, you can survive, right? You can survive. That's really important. And I know everyone's excited about these NVIDIA chips. And yes, because they run the data centers. But what's actually going to happen is that AI is going to move into your phones and into your car and into your washing machine and into your fridge and into everything. So that's kind of the next cycle. So the cycle is going to shift from just all centralized data to at your fingertips processing. Why? Well, it'll be faster, for one. It'll work possibly when you're offline. And it'll also be safer, as in you don't have to send all your personal data to some data center, which doesn't sound like a great idea. So think about it this way. When everybody wants to build houses, what happens? It's a nice little house there. It's a smiling little house. Who makes money? Well, lumber companies to start with, right? Because everybody needs it. So these guys are basically the lumber company of the AI chip world. We've got strong buy ratings on Wall Street, if you care about those sort of things. And it's a cyclical business. So this thing is down from all-time highs, which was in 2021, by 47%. So does that mean it's going to go up 47%? No, but if it were to recover, it would have to go up by like 93%. So to me, this is one of those things that could double or triple. I'm not saying it necessarily will, because I haven't got a crystal ball yet. Winston keeps eating them. That's what golden retrievers do. But if you just look at the pure chart here again, what do you see? You see that zigzaggedy pattern thing here, right? Draw a nice little line, and we're just sort of about breaking out of that. It's actually pretty much the perfect moment, in my humble book. Doesn't mean you should run out and buy it. What's stock number 3? Probably another one you never heard of. This is useful for you, by the way. Put us in the chat down below. I know people would love me to talk about stocks they've heard about, but the opportunities are often the ones you've never heard about. And if this were to recover its all-time highs, it would be up more than 300%. Now, maybe I got your attention now, right? So what do? Synaptics. Ticker symbol SYNA. Well, here is what they used to do. They used to make touch screens, right? Now, I say used to do because these guys have had a bit of a change of business. They're now becoming an AI company. I know, it sounds a bit odd, like everybody wants jumping on it. But what are they now doing? They're moving from touch screens to brains. They're basically making mini computers that can think locally, so no internet needed. And they have a partnership. They got married with who? There's a civil union, apparently, with Google, a small company that apparently does some search stuff. And that's a big validation, right? That's a big, okay, these guys are doing something that's pretty special. They didn't just rename the company and put AI in to hope to, survive. So a little bit like what I talked about just, they have this little AI platform that can make 8 trillion calculations per second. That's just very fast, right? So instead of what used to happen before is that, say you have a device, right? Say you have a phone.
Real estate.
You send data to, some sort of weird looking cloud. It looks like it got attacked by an acid rain, so that is a cloud. Not actually a literal cloud data center, right? Cloud data center. I'm going to get some funny comments on this one, aren't I? And it would then think, and then it would send the data back, right? Now, we don't need this anymore. We just do it in here. So you can see the advantage. You don't need to send money to the data center. You can do everything locally. It'll probably be faster, it'll certainly be safer. And from a regulatory point of view, at some point, they're going to come down on these guys for sending all your private data up to their servers because they're doing that. And that's not a lovely thing, but that's what's happening. So these guys have gone from selling parts, touch screens, basically, to selling a complete solution. You will see in our right that I swap letters sometimes. They probably call me dyslexic nowadays. In my days, we were just called a bit thick. Anyway, cars are basically becoming computers, so they need AI for safety, for self-driving. Smart homes need it. Think about your Alexa, but actually private. And there'll be one, as I said, in your fridge and in your bathroom and in your everywhere, right? So these guys are positioned to be in all those markets. And the numbers are actually looking very, very good. Higher margins, because they're now selling something really unique. And they're becoming a platform company instead of just a parts supplier that can be replaced. So Wall Street is excited about these guys. We've got price targets up to $95. Now, remember that Wall Street analysts are like sheep. They don't like to be called too far away from the flock. So no one's ever going to come out and say $150 or something. It just doesn't really happen. So this transformation story is, though, getting some attention from Wall Street. So why could it be huge? AI moving from cloud to your device. It's called edge computing, by the way. It puts you on the edge. Cars will have about $1,000 worth of chips in them by 2029. And half of all the computers will have some sort of AI thing built in by next year. So they're becoming a platform company with recurring revenue. So we're loving it. And this chart, well, this was a falling knife for a long time, by the way, right? This was a horrible, horrible stock, right? It just really collapsed. And then look at the lows. They just went lower and lower each time, right? But what we're seeing right now is that we're actually recovering here. Right? Now, we've done that before. It's true. So be a little bit careful. Be a little early on this one. Again, I'm telling you to buy it, obviously. But to me, this looks pretty sweet. Now, as I say, early, careful, position sizing, risk management. That's where the real money is made. But the pattern here, look at that high, this high, these ones, these ones, these ones. So you just want to take those out. So about $72 or something like that would be my entry point. And I'll explain that more about that if you join the live training, felixspencer.com/training. And I'll give you really the rule book on that one. And maybe you're thinking, but hang on, I'm just going to hold on to my NVIDIA, why now and all of that. Okay, first of all, we're bullish on the whole semiconductor sector. But I just think that there are some less loved companies that are under the radar that potentially give us a big opportunity because, look, NVIDIA is an amazing business. It's an amazing company, but it's a $4 trillion company. So how much money does it take to make that stock go up? It could double. Well, $4 trillion, it's a lot of money. Whereas these companies are much smaller. And we are seeing that the whole AI compute is moving from the cloud to the device. And it just makes sense. It's just going to be faster. You're going to be able to do all this stuff. So it'll be in your phone. It'll be in your headsets. It'll be in your car. It'll be in your fridge. It'll be everywhere, everywhere. So we've looked at chip packaging being a bottleneck. All three companies benefit from the whole trend, by the way. Cars are becoming computers. Electric cars need way more chips than gas cars. Self-driving features will require powerful processors, and all cars will be self-driving, with the exception of a few sports cars, but they still have that feature built in so you can turn it on. So modern cars will have more computing power than literally a spaceship from 20 years ago. Seriously. And by 2029, every car will have about $1,000 worth of chips in them. And they will not be your great big NVIDIA data center chips. They're going to be little nimble chips that'll do stuff where they are. On top of that, you have a government that is insanely supportive of this whole sector. So you have the CHIPS Act, which is going to pour a lot of money into these sectors. You've got $500 billion in private investment promised. And of course, the exact numbers will only come out when they're actually spent. But the government is basically there to help these companies succeed because they need them to succeed because they want to move all this manufacturing back home. So you've got multiple growth drivers. At the same time, we're early in what I think is a multi-year growth cycle. This is like catching the internet in 1995. Now, could stuff go wrong? Yeah. People could get bored of semiconductors. So we don't want to compute stuff anymore. Seems a little unlikely, but possible. We can get a massive economic recession, given that we have massive fiscal stimulus, massive tax cuts, lower interest rates. That all seems kind of unlikely. But yeah, maybe the trade wars disrupt supply chains more than they already have. That's a possibility. And maybe people will just think AI doesn't do anything for a little while until it does. Because you know what happens with adoption cycles? This is probably the most valuable chart of this that I've ever seen. So you have a chart. Looks like this. You have time down here. And then you have speed of adoption. All right. So this is what people think.
Okay, let's open the loop there and jump into a little bit of a breakdown here. All right. If you loved Open Door, the real estate technology company that just exploded, there's one stock that could be next. It is a real estate technology company. It's not OPAD, OfferPad. It's not open, OPEN, Open Door. Let's jump into the chart. Let's talk about why this ticker is poised to explode technically, besides it just being a sympathy of Open Door, which had a lot of interest and has some big name investors, including Keith Raboy as the, I believe, CEO. Let's take a look at AIRE. I'll tell you the ticker right now. And let's make sure there's a spot to get in with tiny risk and big upside, which is what we're all about on stockscommunity.com. Here we go. This is the chart, okay? Definitely a lot of interest from 25 cents to over $1, okay? A quadruple. This is a penny stock, okay? It's a $1 stock. We say anything under $5 is a penny stock, roughly, okay? And look, is this speculative? Yeah. I mean, this move was insane back in basically New Year's Eve, okay? Since then, this is what we're looking at. and the volume is low, but you already knew it was going to be low. It is at $1 stock. But you have to keep in mind, look, it only trades, this is what, $200 million a day in the last 10 days. So for the 1% of you watching it, you're not really the 1%, you're really like the 0.1% of people who would be watching this. If that makes sense. I'm talking about people with a net worth of 20 million or more. You can't really put your whole net worth in this stock, okay? Because you're going to move the stock, okay? Now, for everyone else, okay, that was the 2 seconds for those people, because we do cater to those people. This channel is about stocks where you can put 10 million or more in the stock and not move the stock and get it out the next day. That's an important caveat, okay, to those people. And we do cater to those people, okay, because we love helping people who already are doing well, okay. But for everyone else, we want to help you too. And that's why we have a community that costs $7 to join for, sorry, it's pretty expensive. It's not $7. It's $25 to join for 7 days. You can check that out at stockscommunity.com. But no more pitches. This is the volume. It is tailing off slightly. It held on. This is would be Monday. This chart is a little takes adjusting. Okay, this is Sunday futures right here. Okay, which are important. If you check your broker at 6 p.m. futures open, that will affect how stocks are trading, particularly with overnight trading. As you can see, Tesla started going up at 6:01 p.m. on Sunday. Do you need that level of granularity? No, I'm just telling you that will impact your positions, okay? Particularly if they are large. You do care about what happened on Sunday night. But this is the chart. This is the level, okay? Going back to all the way in June of last year. And then this is November of last year. This is $1. The whole dollar level is pretty important. We are above that right now, but you can risk that level and then look for another move like what happened in late December of 2024. I don't know exactly if you can expect that to happen again. I mean, this was crazy. This was on December 27th. There was some volume leading up to that as well on the 19th. And what happened on the 19th was they announced that they were going to give 25% of their excess cash to buy crypto. Okay. And this was an important time. I'll get to what's going to happen in the next week, which is what we all care about. But we do have to understand what this company can do, okay, in order to understand what it's going to do. So I'm looking at IBIT. This tracks Bitcoin. This is the Bitcoin ETF. And if we look at the 19th, we can see Bitcoin had just broken out from, trying to remember what exactly this level was. I think this was like the 120s, so maybe this was like 80. Sorry, my Bitcoin knowledge is not as good as my stock knowledge. Okay, this was 60. But yeah, this is the one. Actually, this was the 108 breakout rather than the 120, 118. Don't slight me for my Bitcoin knowledge. If I do buy Bitcoin, you see I buy it right here, but right now, in this case, we're trying to understand how this is affecting stocks in the NASDAQ. Sorry for touching the microphone. Which it does. It didn't used to, but in the last few years, Bitcoin has been making stocks move based on how it moves. So we do have to care about that. So Bitcoin has just gone up, all this to say, back in late December 2024. And then Realpha, AIRE, this open door competitor, had a massive move. Well, I mean, you can barely see how massive this was, but it actually was pretty significant. This is almost 30% in one day, going from $1.10 to $1.50. I know this is pretty low volume. Okay, it's only traded like $1 million back at that point, but it is a good indicator of what's going to happen again. On that particular day, there was a huge move, and it wasn't necessarily news driven, okay? And that's probably no surprise. I'm talking about a penny stock year. Literally, it was, under $1 stock down here, handfuls of pennies. And the announcement from the company was they were pivoting from short-term rentals to AI-powered mortgage real estate. Okay, AI gets a lot of excitement. It's basically move to crypto was probably the spark. Okay, but on this particular day, even though they had a 20 million plus net loss, there was euphoria. Okay, and if we look at Open Door, trust me, I'll move down to what's going to happen in the next 7 days very soon. But if we look at Open Door, it didn't even move on that last week of December last year. If we look at OfferPad, these are the 3 real estate technology companies. Okay, you want to look at sympathy companies to understand what's going to happen. Didn't move either. So now they both are moving. So imagine how much explosion opportunity there could be for this company, which is already shown to have insane moves. Is this one difficult to catch? Yeah, I mean, you got to look at your phone the next day and sell it before it goes back down 50%, and then over the next couple weeks goes down more. Do people look at their phones once a day? Yeah. I think almost everyone would say, that's fine. I can take a look at my phone tonight. Something to look forward to. So that's the play. That's why this could be so explosive. The fundamentals of the company are honestly not that important because it's a $1 stock, right? For people that do still like to know what they're buying, even when it costs $1, this is basically what this company does. Okay, they do have a connection to Open Door, a connection to OfferPad, and they are basically trying to get rid of real estate agents. Okay, there have been thousands of startups trying to do that. This one is now publicly traded. Okay, they made it pretty far. They could make it farther. We're trading the volatility though in the next week. And they did report this insane 2,000% year-over-year revenue growth, okay, which investors love. But of course, they are still a VC company operating at a net loss, okay? And that net loss actually increased compared to the same period last year. So this is not a company you want to throw your life savings into and walk away for a year, and definitely not even a month. But if you're interested in moves like this, 250% in a week, and potentially more, I think this is about as good as an opportunity as I can possibly bring to you at this particular moment. And I don't think you have to get all Wall Street analyst about the EBITDA numbers, okay? Because this is a publicly traded startup. That's what we're doing. reading headlines that are eye-catching and trying to look at the chart to figure out how you can get in, risk 20 cents, and make $1 or more. All right? It's a speculative idea. Occasionally, it's important to bring those to you. If you like to talk about longer-term ideas, if you want to talk about your portfolio, you want to talk about how I find this information, how I use indicators to invest in a relatively medium-term manner, a week to a few weeks to a few months, occasionally over a year, go to stockscommunity.com. It's $25 to join for 7 days. You can ask all the questions you want. You can ask other people in the community as this community grows what they're up to. It's kind of like a hive mind for stocks. If you haven't subscribed yet, hit that subscribe button, and I will see you in the next one. All right, let's see what else Felix is up to here.
Right? This is what people think, expect. It's not reality. What happens is you get a new technology, you get AI, and people think, oh my God, everyone's gonna use this by tomorrow. It's the best thing ever. And then people realize it's gonna take a lot longer, and then everyone gets very, very disappointed. And then what actually happens is that over time, this is what happens. Right? So we have not seen this bit yet. That's the bit that's going to come at some point. And that bit is actually going to be the bit that makes a lot of people a lot of money. A lot of people will lose a lot of money, but if you know what to do, if you know how to be prepared, you're going to make a lot of money. So right now, we're somewhere up here. This is now. So little warning, it's going to happen. But if you know how to buy the good companies on the dip and you know how to take profits near the top, well, you're going to be very happy. So summary, AMKR, yes, there is some competition from bigger players. It's true. These are some risk I see. KIC is smaller and therefore more vulnerable to downturns, but they do have cash. And then SYNA's transformation, well, maybe they screw it up. Maybe the partnership with Google doesn't help you. There's all of that. So you want to focus on risk management with everything because you are never 100% accurate all the time. That's not how this works. But all three companies have strong government sheets, balance sheets. We've got the government support. So what I would say to you is do this. Do this for the next timeline. I'll give you a little timeline here. First of all, join me on the live training, Felix Frenzel training, because education is what you keep forever, skill, basically. Everything else is just sort of a stock tip. In the next 6 months, then we have 12 months, and then we have 18 months. See if we can get all of this on the screen. So we're expecting higher profits for these companies. We're expecting new products from all these guys, new products. And we're expecting more government support. Those are the catalysts that I look for. Over 12 months, you see greater AI adoption because hardly anybody is using it right now. Car sales pick up. That's going to be very good for these guys. And also some of the factories. So some of these guys are building new plants, right? Those plants are coming online. And then if we go out a little bit more, 18 months, maybe even to 24, we're looking at higher market share. That's what we're going to watch out for. Higher profits, tech improving. So just like basically better tech, right? So that's sort of the timeline that I'm looking at here. So the first one, they can really control. The second one is a little bit more the market and the economy. And the third one is the result of the good decisions they make over the next year. That's basically that. Now, what should you do right now? There is just a couple of key skills everybody needs to have, right? It's proper timing. And that doesn't mean you're going to time the market perfectly. Nobody does. But most people get it horribly wrong. There is position sizing, which is the ultimate... He's such a cuddly little cat, this guy. This is Albert, one of our top researchers here. So the most important thing, and I think that's probably the number one thing that I see from the 20,000 students we've had, when to take profits. Probably the most valuable skill. Everyone's always focused on, let's find the next Tesla. But most people screw up even a Tesla because they don't know when to take profits. So I'll teach you those if you join felixfriends.org/training. There's a link down below. It's in the description. And I'm excited to see you there. If you got some value out of this, share it with somebody, maybe even your cat. And this is Albert, who's our cat daddy. He's got 5 little babies, which were entirely unplanned. We went away for 3 days and suddenly we're like, pregnant. They were meant to get de-sexed literally 3 days later. You timed that rather well, didn't you, Albert? Very well timed. So I thank you for watching, making it to the end of this video. And congratulate yourself. I hope you learned a lot. And I hope to see you on the live training. Take care. Are you worried you're going to get caught out by the market crash that will inevitably come because the market moves in patterns? Well, that's what Hugh just told me to watch out for. And in all seriousness, there is actually a structure to predict the market patterns that happens with 90% accuracy. And I want to walk you through that. So you are better prepared because guess what? Nobody expects a crash when the markets are doing fantastically well as they have been.
All right, let's see what Corey has to say here.
This is what we're constantly doing in Discord. If you're wondering what your favorite stocks and the market in general is likely to do this week, then this is the video for you. We have a lot of data coming out this week, including the federal interest rate decisions. So strap in, because somewhere in this video, I'm also
little lag here. We're coming back here. This is the wired internet, fiber internet lag. If you can explain that one to me, I would be impressed. I'll even do a little internet speed test here from Netflix. Oh, Netflix doesn't want to do internet speed anymore. Here we go. Okay, definitely downloads, which is what we're trying to do. We're trying to watch a video. It does upload. Doesn't upload much, but it is very fast, right? So if it's so fast, why doesn't it work? That is the question of the day. But you know what? It's gonna work.
This is what we're constantly doing in Discord.
Almost.
If you're wondering what your favorite stocks and the market in general is likely to do this week, then this is the video for you. We have a lot of data coming out this week, including the federal interest rate decisions. So strap in, because somewhere in this video, I'm also going to show you how you can gauge what is almost guaranteed to happen in the market Monday, and you're going to be able to do it tomorrow in the early evening hours. So don't skip any part of this video. I'm constantly giving this type of information away in my Discord. This is what I teach. It's just one of the many strategies gauging the market the week ahead. It's how we printed on XYZ, Meta, Snowflake, Broadcom. We printed 20, 30, 40, even $100,000 on Oracle and Snowflake. And then Tempest AI. I have students that made $25,000 overnight. You can see those trades on the left-hand side of the screen. And if you want to make these profits, you have to understand there's a lot of risk in the market, and there's no such thing as trading without risk. But my job is to show you how to mitigate the risk, make stronger moves in the market so you can potentially make the money like my current students are making right now. It's how I'm able to live my best life, my dream life that I've always wanted to live, from bankruptcy to being able to own pretty much anything I want, my dream cars, the things I want to do, take care of my family, my kids, and just do what I love to do and help others in life. This is what it's all about, and I want to help you do the same thing. Just understand there's a lot of risk in the market, and I want to show you how to be safe and manage that risk while making profits. This is what we're constantly doing in Discord. I've had a lot of people ask me to show the Discord profits, and you can see right there on the screen the trade alerts that I put out for Meta, Snowflake, Tempest AI, Broadcom, and Oracle right there on the screen. You'll see that this student had $5,200 on a $67,000 account. This is roughly 8-9% in 1 week. Another student made 40% in a week. Another student made $58,000 in a week. Student right here made $8,000 in 1 week, $2,400 on Lumen. Another student right here made hundreds of dollars on my different trades, each of them. This student right here printed on Tempest AI, made $25,000 overnight in 1 day. This student made $64,000 in 1 day on a couple of my different trades. You can see the students are just printing on these trades. Another $1,000 for this student. Small account, $2,200. Another smaller account, $1,800. This student right here made $11,000 on my Oracle trade. $17,000 on Oracle. Right here, $100,000 in a day. And this is continually going on in the Discord. As you can see the screenshots right there on the screen of the trade alerts I put out. Lots of people were pumping PayPal, and I told everyone to get into XYZ, get into Meta. We printed, then it was Oracle, Broadcom, Snowflake, Tempest AI, and the list just goes on and on. So if you guys are having trouble understanding anything in this video, or you want the trade alerts I'm showing on the screen right now, I would love to help you. Don't put it off. Take action now. Let me show you what you're doing wrong and why the market is rigged against you. Link to get started in Discord is below. I look forward to helping you and seeing you very soon. Let's dive into today's video and talk about the stocks at hand that are likely to move this week and the data. We're going to start off with the VIX, SPY, SoFi, Palantir, NVIDIA, and Tesla. Let's go ahead and look at these stocks right now. First thing we're going to look at is the VIX. The VIX shows you the volatility of the market. You can see every time the market has a spike, it comes back down. And when it hits all-time lows down here around $11, $12, like we most recently did, or almost, it spikes back up. So there is a likelihood right now we're breaking out of this wedge that it could go up or down if we get interest rate cuts. Well, then it's likely to consolidate and drop. But this week is going to have some volatility. We have a lot of data coming out this week. Retail sales on Tuesday, housing starts, building permits on Wednesday, along with the federal press conference and the interest rate decisions and the projections of economics. This is going to transpire on Wednesday, and this is going to be where the market decides its ultimate direction for the next couple of months. It's already baking in a 25 to 50 basis points in rate cut. So we will see what happens there. But we can see that when the VIX goes up, the stock market goes down. When the VIX goes down, the stock market goes up. But it's not the only thing that is indicative of the market. We also have bonds and the treasury yields, which is the 10 and the 2, and the 30-year yields, as well as 20. The 10 and 20 are never supposed to be inverted. When they invert, there's usually a recession. And when it corrects itself, there's usually signs of a recession. We had both of those happen in the past 5 years and still no recession. And that, I believe, is a strong indicator of how our market is and our economy and our overall inflation rate being held steady with interest rates. So that is a good thing. And anytime you're in between the green and the yellow, there's lots of premiums, elevated volatility, good for option selling. It's very good for option buying when you're below the green, because option selling below the green is safer, less risk, less volatility, but less premiums. When you're between the yellow and the orange, option selling and buying could be both good depending on the stock you're looking at, but it's elevated risk. Anything above orange is very risky, and above red is pure chaos, in my opinion. It's like a bloodbath. It's a pure buying opportunity usually, because when the stock market has volatility in levels above 25 or 30, any good stock that you're looking at, like Tesla, Meta, Microsoft, Google, SPY, stocks like that, Coca-Cola, it's a buying opportunity, because these stocks, when the volatility is this high, is usually going to be 10 to 15% pullback, which is a very strong buying indicator. So this is what we did in the Discord back in March and made a lot of money. Looking at SoFi, this is very likely to run. I put out a trade in my Discord for SoFi, and we are already printing on it. And if we get interest rate cuts and SoFi goes where it's supposed to go, or is likely to go based on dark pool data, we are going to make a lot of money in Discord on SoFi. Right now, if you're selling put options, you could be selling 22.50, 23, even 24 puts. SoFi has been consistently growing and consistently exploding in an upward direction. With interest rate cuts, this is going to be even stronger. You have to understand that the economic turn that we're going for with interest rate cuts and the way the economy is going right now would favor SoFi. This would be a very strong catalyst. I've also seen exponential movements in dark pool data on SoFi, Citibank, Wells Fargo, Bank of America, Visa, MasterCard in the financial sector. And this being in the financial sector as well as fintech, it also scales partially, very small, but partially with AI and the market sympathy as well. There's also been a lot of dark pool data on Palantir. In fact, there was a $55 million worth of dark pool data yesterday. And I put out a trade in my Discord that we are very likely to print a lot of money on. There's been a lot of interest in Palantir. Now is definitely the time to look at Palantir. There's always risks. You definitely want to gauge these risks and be very cautious with your portfolio. But Palantir has a lot of dark pool data, and it signifies there's a very strong likelihood this stock is going to move all the way up into the 180, 190 range or higher in the coming 2 to 3 months. It's all basically on interest rate cuts in the market and the way the market is currently going. Looking at Microsoft, this is another play that I gave Discord. Microsoft is poised to run with interest rate cuts, and this is also a stock that has broken $4 trillion recently when the stock was $562. It has calmed down. It'll probably settle in this week in the 510, 505 range. It could pull back if we don't get interest rate cuts. But if we do, it's broken this structure right here, and it's now turning back around and heading up. So Microsoft has a very strong potential with interest rate cuts to hit 525, even 530 or more by the end of the year. There's a strong potential for it. Obviously not guaranteed, but very likely based on dark pool data. Looking at Tesla, it is running. I told everybody on YouTube and the Discord that it was shaky ground for Tesla in this range. We were waiting for some catalyst or something to pop up on Tesla, which has begun to happen over the past couple of weeks. On top of that, interest rate cuts are looming. If we get interest rate cuts and things keep going the way they're going, then Tesla very well could come up into the 430, 440 range and break into the 477 range. Anybody who had an opportunity to buy down here at 290 or even down here at 229 back in April missed a very big opportunity. Even right here in my AVP, which is a strategy I teach in Discord, between 300 and 330 was a very strong buying opportunity long term. You can see anyone who bought in this range is now up $50 a share, which is $5,000 in every 100 shares or every call contract that you may have that's deep in the money. This is very strong. You might be asking yourself, well, how can I gauge this type of stock activity? How can I estimate where stocks are likely to go and time them a little bit better? Well, that's something I teach.
Okay, guys, let's do a little breakdown here. There is one company, it's CRCL, which is starting to turn up here. Okay. CoreWeave is as well, but CRCL is a little more better risk reward. It hasn't turned up just as much as CoreWeave. And it does have that crypto connection, which I think is pretty big with this administration. Okay. So let's jump into a little breakdown here. There's one stock that is nearly ready to break out. It is connected to crypto in a huge way. It is a recent IPO, which means the price hasn't been agreed upon yet, hasn't stabilized. And if you're someone who likes opportunities with high reward and small risk, you like being in hot sectors like crypto, particularly with the current administration passing the Genius Act and urging crypto companies to come on shore and befriend or at least be congenial with regulators, which is what everybody wants in the first place. is for the regulation to be clear so that these crypto companies can comply and grow and know they can grow in the US, which is the best business environment. I'm not going to hold you hostage here. The ticker is CRCL, circle. And let's look at the chart. Let's see what it's got going on. Okay. So here's CRCL. It is a recent IPO as of June. And this is the most recent revenue numbers. Okay. 50% increase year over year when the earnings came out in August. The forecasts were exceeded for EBITDA. Massive net loss of 400 million. Okay. Now, they did have to pay for the IPO. So that cost hundreds of millions of dollars because, you know, investment banks have to get paid. And look, there's also some stock compensation, some convertible debt. This is a mess of an IPO valuation scenario. So if it's a mess, why are we buying it? Because it's at a very important and you could say advantageous level, technically, where people aren't buying it to hold it for a year, but if you can buy it at $140 and risk, well, you don't even have to risk down to this 116 level, which is pretty clear. You can risk this 130 level. You're risking $10 to make potentially 40 or more. And this is what you call a breakout, guys. This is about as clear a day. A breakout. Now, there is a sort of level that's important again if it passes this 50-day moving average, okay? But if we look at the intraday, boom, okay? See how this moves over the next couple days? I think it is the better move compared to CoreWeave. CoreWeave is the NVIDIA-backed company. At this particular moment, Circle does look like it has a little bit of a more favorable opportunity to get in just because you're not able to risk as much. I mean, look, this is $110. This is $140. Look at CoreWeave. This is $120. This is $90. Okay, so on a percentage basis, 40. I know this is getting nerdy, but this is 40%, and this is only 25%. Okay, so percentages really start to matter when you're talking about putting 10,000 shares or whatever your risk profile is into this stock. Now, for the fundamental folks, what the heck does this company even do? I told you about it being connected to crypto. Okay. It issues USDC. That's a stable coin backed by US dollar equivalent assets. Okay. And like I mentioned, it operates within the regulated framework established by the Genius Act, by the government. Okay. So if USDC is considered the stablecoin, essentially what it means is if you have a bunch of Bitcoin, you can hold it in USDC, and it's a level of stability that you might find closer to the US dollar than Bitcoin. Okay, so if you are a holder of cash, bonds, real estate, if you're someone who invests, okay, and you want to buy a bunch of Bitcoin and you don't want to hold all of that in Bitcoin, you can hold it in a denomination that is closer to the US dollar, okay? It's a way to diversify in a safe way. And it was only this year that a regulatory framework has been established where this company, which IPO'd in June, can gain adoption on an institutional and high net worth level, okay? And money can flow into this company. as opposed to specifically people who are slightly more risk-taking who would buy the stablecoin itself, okay? Compared to people who are even more risk-taking who would buy Bitcoin, okay? Which, again, Bitcoin is getting on the level of the dollar, so I'm really splitting hairs in terms of how risk-averse one might be. This is for the very highly risk-averse. It is an IPO, but those are all the reasons why it's not just some Yahoo crypto, Bitcoin, Dogecoin, Ethereum treasury that came out yesterday. This is the company that offers USDC to the public. So it's kind of like the gold standard, which again is a relic of the past, but it's what you call a fiat-backed stablecoin, okay? So it's backed by reserves in regulated financial institutions. That's important. I keep underscoring that. Regulated. So this is very safe. Now, a little more about what the Genius Act is for guiding and establishing national innovation for U.S. stablecoins. Okay. Signed into law in July. Okay. This is the IPO in June. This is July. Price did stabilize, but IPOs were also just coming down. Okay. CoreWeave also came down at that time, the NVIDIA backed AI infrastructure company. So Figma IPO has been pretty mispriced from the beginning, and Figma is a company that Adobe wanted to acquire for $20 billion. So look, I mean, is this IPO performance insane? No, but we don't want insane IPO performance. That's what you see in an extreme bubble like the late 90s. So don't get too hung up on what this volatility looks like. What we want to look at is these levels, which I gave you, 118, 115, and then 130. So you can buy at 135 or wherever we're at right now. Look for a big upside, risk $5 to $10. Final bit of detail for the value heads. These are the dates. Okay, Genius Act was signed into law mid-late July. Long time coming. Well, a year and a half. Basically since the new administration came in, that sort of expedited it, and that's when it was introduced in February, so last year. This is the main guy, okay, who sort of champions this, okay, David Sachs, stablecoin, AI and cryptos are. He is appointed. He is working in the White House. And lastly, I don't know that you need to worry about these partnerships, but they do have partnerships with the biggest of the biggest, of course. Okay, they're USDC. Binance is definitely top of that list. So, if you do like connection to NVIDIA, well, in September, this is the biggest news for Circle. They haven't had a lot of news since their IPO. But this news came out in September, which is now, depending on when you're exactly watching this video. Hopefully you're watching it in the next week or two, because that's the best opportunity, ideally today or tomorrow. But they do have this connection to NVIDIA indirectly. They have a partnership with CoreWeave, which is has NVIDIA as an investor. And they're integrating Circle stablecoin USDC solutions. So basically how USDC is able to be so stable, to sort of say the technology in a hand-wavy way, into CoreWeave's basically AWS, Amazon Web Services like platform. So it's a big deal. It's a strong sign of confidence that it's linked indirectly to NVIDIA. And Goldman Sachs, JP Morgan expressed caution. I mean, those are warranted. This is from Reuters. Expressions of caution, but also keep in mind, I don't believe that they have a vested interest in the success of USDC, let alone crypto at all. So do have to look at incentives, and we don't really need to get too granular into the detail of evaluation again, because it is an IPO. And of course, the investor relations will just be positive and bit biased, okay? Which is why we talk about companies on this channel. So you get a more balanced look from another investor who's trying to filter through all. Oh, sorry, I was being mean to ChatGPT if you saw that there for a second. It's giving me the wrong company. This is the company, CRCL, and you don't have to listen to analyst price targets, but I don't think 230 is too crazy given that's where it was just a few months ago. Do you have to hold it for 230? No, I gave you the price levels. You know, $200 is going to be a huge hold dollar level. You can actually see most of the volume was traded there since the IPO. But these are the levels right now, okay? Just about one, see, going back to late August, mid 130s, and then this 20-day moving average is important for it to come back and maybe kiss. If you do like this analysis where I give you when to get in, where to get in, why to get in, and you want some help, maybe you don't know what a moving average is. Maybe you don't use this charting platform I'm using. Maybe you use a completely different one. Maybe you use Robinhood. Maybe you use Schwab. Maybe you use Ameritrade. I don't know what you use. I can help you with that. I can help you with stocks to buy and how to buy them and how to see what they're up to. And this is not for the person who looks at their screens every second of the day. This is for someone who can step away. Whether you got a job, whether you got other stuff going on, you're busy. So if that's interesting, head over to stockscommunity.com. Try it out for $25 for 7 days. Hit that subscribe button here on YouTube to see more videos. And I will see you in the next one. Peace out.